Hey, Bulls and Bears, we are back with another dose of economic insanity today. The Dow Jones, massive surge today. All indexes in the green today. Dow Jones up over 770 points. What is the optimism about? Well, let's talk about it. Now, first of all, what's the good news that could make a rally like this one? And by the way, Dow Jones up 2.6%, NASDAQ 3.3%, Russell 2000 3.3, S&P almost 3%. What is the good news? Is there good news? Well, when you look at households, no, households are being decimated. And it's not just the US, also in Canada. Take a look what's happening in Canada. And this one comes out of Yahoo Finance. Nearly half of Canadians are on the brink of insolvency. For those that haven't been following it, Canada's housing bubble actually dwarfs the US's housing bubble. And what happens when there's a housing bubble? Households struggle. If you're selling your home and you're moving to a cheaper place, it can be a good thing. But for most people that are just sitting and people that actually have a house just to live in, imagine that, a house just to live in, not flipping or selling for profit, not as an investment, just to live in. People that just want to live in their houses are seeing their cost of living explode, of course, but also higher carrying costs for that home, repairs, maintenance, even taxes, everything pushing people to the edge financially. This article here says Canadians are finding it more difficult to pay for food, housing, transportation, and nearly half are on the brink of insolvency as rising interest rates and soaring inflation continue to weigh on household budgets. One half of people in Canada on the brink of insolvency. So where's the good news? Because the United States is similar. Most people here living paycheck to paycheck, working their way towards bankruptcy. Most people getting deeper in debt. 7 out of 10 people in the highest debt they've ever been in and getting deeper in debt. Not a good thing. So what's the good news? The good news for the markets anyway, the reason we're seeing this rally is because the hope or the expectation that easy money is around the corner. More quantitative easing, lowering of the mortgage rates. You see, when the Fed comes in and they buy everything, bond yields go down, and therefore the rates go down. You're going to see lower mortgage rates if the Fed comes back in, similar to what they did over in the UK. For those that didn't follow my last few episodes, in the UK, they basically reversed course. It was going to be, at first it was going to be, we're going to tighten and we're going to do whatever it takes to fight inflation. Now it's whatever it takes to prevent a crisis. And what happens when the easy money gets pulled away? A financial crisis follows. So to prevent a crisis, now they erased everything that they said. That's no longer whatever it takes to fight inflation. It's now whatever it takes to prevent a crisis. And myself and lots of other people are saying the Fed here in the US is going to be not far behind in something very similar, coming in to prevent a crisis. And what happens, you're going to see if they do this, you're going to see home prices go back up, mortgage rates drop, more QE to infinity, more easy money for the markets, more speculative investing, people borrowing money for very little to nothing with lower rates and investing in the markets. The stock market will shoot back up like you've never seen. Look what we saw today just on the optimism of the reversal of the monetary policy. This is wild. This is insane. This is not the way markets should operate. Also, it gets even wilder. It gets even crazier. Job openings plunged by more than 1.1 million in August. There's a 2-month lag on this, so these August numbers are just coming out. Imagine how much worse it's going to be, how much worse once the September numbers come out. But even with this bad news, this is the biggest plunge that we've seen in job openings since the onset of the health crisis in 2020. Yet massive gains in the stock market. Doesn't make any sense. Well, it does make sense when you look at how the economy is ran. It's ran on easy money, ability to borrow at rock bottom interest rates and take on debt, and that creates the illusion of an economic boom. That gives the incentive for people to invest in markets, borrow cheap, invest, and watch asset prices go up and make money. So even with bad news out here, 1.1 million fewer jobs, job openings plunging, even with that bad news, markets still skyrocketing. Absolutely. Job openings in August totaled 10.05 million, a 10% drop from the 11.7 million reported in July, and more than a million less than expected. Complete wacky Insanity. Pick your word. And what are people saying about it? Veteran investor Ed Yardeni. The Fed will hike rates once more in November and then stop because of soaring dollar risks breaking markets. I think it's going to be one step beyond that. I think they're going to stop, and I think they're going to probably reverse in early 2023. We'll see what happens. We'll see if this guy is correct or not. The stock market strategist says the coming recession could be the biggest ever, and he says, quote, "I recommend prayer." Some people are praying for markets to crash so they can buy. People are hoping for home prices to crash so they can buy. But he says pray that there's not a crash. Or he says the coming recession is going to be the biggest ever. I think it's going to be beyond a recession. It's going to be a recession / depression, even if they cut rates again, because rising asset prices are also not a good thing. Not a good thing. The housing market coming down, for example, real estate affects the entire economy. But higher prices could even be worse when you look at the position of households right now. You see, we have unpayable debt. Households have unpayable debt. They're not going to get pay raises big enough to pay off that debt, plus keep up with the cost of living. It's impossible. So in this case, rate cuts could be even more dramatic and more painful than the Fed staying where they're at on the rates and going higher on the rates. You see what I'm saying? So it's a rock and a hard place, absolutely, is from what I see. This investor here says he's about as bearish as he's been since 2008. That's a hedge fund manager, Keith McCullough. Someone else, what do you think is going to happen here, folks? Next, another Market Watch article. We don't need as many employees. Factories slow as rising interest rates rattle the economy. People further in debt, less money to spend, people buying less stuff, less manufacturing. We see the retailers loaded up on inventory. We see Amazon shutting down warehouses and canceling leases on several warehouses. Also, Amazon canceling construction of 7 new corporate towers. Amazon sees something on the horizon. FedEx is out there seeing what their shipments are. Big reductions, less people ordering things, less deliveries. FedEx was out there a couple weeks ago warning about an oncoming recession. The writings are on the wall. The UN's out there saying stop raising rates because you're going to crash the world economy. This is wild, folks, and it's going to get even wilder. Higher rates, lower rates, it's not going to matter. The middle class, the working people, most of these people on the edge financially are not going to get out of this unscathed. So hope you're doing well. Fasten your seatbelts because it's going to get even crazier. Another Market Watch article here. Rising interest rates, economic slowdown, and higher unemployment will drive U.S. households to sell more stocks in 2023. So who's going to be buying all the stocks? And this is according to Goldman Sachs. Households are going to be liquidating their 401ks, selling their stocks because the dividends that you get on these stocks are still not enough to keep up with inflation. You're lucky to get a 4 or 5% dividend. That's a very good annual dividend. But when inflation's 8, 10, and if you look at the real number, 17, 18%, it's not going to keep up. People are going to be selling. Will they continue to sell their homes if mortgage rates drop back down? That's the question. I think it's going to be bad no matter which way this unfolds. Please let me know what you think down in comments. Thanks, everybody, for being here for this report. Keep stacking and stay safe, folks. Until next time.